Good afternoon and welcome to our webinar. My name is Michael and I am the co-founder and co-owner of backtothefuturetrading.com. How is everybody today? Fantastic. Well, I want to welcome you to my crazy universe. If you're here today, we are talking about time signals and predictive timing techniques for TradingView and NinjaTrader adherents users, in particular TachEon Warp for NinjaTrader and Kronos for TradingView. We have a very unique perspective, and it's even today fairly controversial. You get an instant reaction one way or the other when people find out what we do. And we believe essentially that time is the most important factor when determining market movements. And we have a pretty cool method of proving whether or not predictions work that I'm going to get into here right now. Every week we publish an internal memo, and on this webpage, I'll put a link to it in the GoToWebinar chat box. On Monday or Tuesday every week, we post the forecasts for Wednesday and Thursday in Eastern time in advance. And so, for example, today's E-mini S&P 5-minute chart, 11 people have checked it out this week. This screen was captured 5 days ago, and you see if I hover over the timestamp, it says Saturday, 17th of May at 5:52 GMT. Can you guys read that value from where you're sitting in your webinar? Rich, does that show up okay? Now, we tend to look at the 5-minute ES every week because it's one of the most popularly traded markets. NQ would be a close second, E-mini NASDAQ, but I want you to know before we continue that this works with just about every market. And so what's unique about this proposition is that 5 days ago, our software had determined there were repeating movements in time, movements where markets were going up and going down with regular irregularity. What that means essentially is when it looked back across a few weeks worth of data, it noticed something that most people miss. It noticed that there were recurring down movements at 4:25, 6:35, 10:20, 12:50, and 3 p.m. Eastern time. It noted that there were recurring buying movements at the times below the zero line, 9:50, 10:50, 2:15, and so on. And so different time frames produce different results. The study on a 1-minute chart would look different than the study on a 1-hour chart, for example. And that information was available to us 5 days ago. Now, this is a pretty bizarre proposition because we're taught by the vendors, we're taught by the gurus, we're taught by the influencers to sit there like zombies, like slaves, watching every tick of the market up and down and up and down, and price action and fair value gaps. Fair value gap. I still don't know what a fair value gap is. But this seems to suggest that somebody somewhere, institutionally or otherwise, had a plan for today. Now, let's see if we can just prove that the signal times are the same as they were 5 days ago. Step one is validating the data. So 8:45, 6:35, 6:35, 8:45, 10:20, 10:20, 12:50, 12:50, 3 p.m., 3 p.m., 2:15, 2:15, 5:15, 5:15, and so on. Can we admit as a group that the signals that have been populated in the interwebs for 5 days are the same times, in fact, that are marked on my chart today? Yes or no? And I ask this seemingly obvious question because there will be people who, no matter what, will not believe what they're seeing right now. They will try to poke holes in the entirety of this little experiment of ours. Okay, cool. So I'm going to move this off screen just for a second. And let's look at the entirety of the Euro US session and ask ourselves a pretty straightforward question. If we waited for the big guys to do, whoops, let's delete this and type it again. What percentage of the time did the signals we were expecting do what we were expecting them to do? What percentage of the time did the signals do what we were expecting them to do? And here it's a fairly straightforward low-hanging fruit exercise, right? We can say that the market fell at 425. We can say that the market rose at 515. We can say that the market fell at 635. We can say that it rose at 820. We can say 845 was a wash. We can say 950 it rose. We can say at 1020 it went down. We can say at 1050 it went up. And we can say at 1250 it went down. We could say from 2:15 to 3 o'clock it went up. And from 3 o'clock to 3:45 it went down. And at 3:45 it did not go up. So, what percentage of the times were the things we are expecting to happen? It seems like more than half of the time. In fact, let me just set a baseline of agreement. Can I say that at least 60% of the time, the signals produced the move at the time 5 days later? Yes or no? Is there anyone here who says, no, it didn't do what we were expecting it to do? Or are we kind of confronted with this realization that things are happening with regularity? And if we only look at what the banks are telling us they're about to do and believe them, they'll do what they say they're going to do. Anybody? I'm open for criticism. I would love for somebody to tell me that it's less than that. I think it's a little more than that, but we'll stick with it. All right, cool. Well, this was yesterday's. You remember that we had 2 days worth of data. And if I scroll up, the E-mini S&P for Wednesday was added 5 days ago. And if I hover over that, it says Saturday, May 17th, 5:42 GMT. Now, when we look at Wednesday's times, we're confronted with the same realization. What percentage of the time did the move occur at the time we were expecting the move to occur? Was it 60% or greater? I don't even know what this is. Throw that little 1 signal in there, and then at 3:55. So this approach, this is 100% leading with 0 lag. What else? We know exactly how many setups that session are available. What else do we know? We know exactly what our risk will be each time. We know the direction the move is supposed to occur. And then we know how long the move should last. If this isn't the Holy Grail, what is? If this isn't the Holy Grail, short of Bernie Madoff insider trading, short of having Marjorie Taylor Greene or Nancy Pelosi access to insider trading, what is better than this? Because I still haven't found it in terms of looking for solutions. If we look at Tuesday's information, I didn't give you those dates, but were they any less obvious on Tuesday than they were on Monday? Or sorry, Wednesday or Thursday? For 3 days in a row, it looks like 60% of the time or more, the move you were expecting at a certain time occurred. And it's not just Tuesday, it's not just Wednesday, it's not just Thursday. We can go back and look at Monday. And Monday, it's more of the same shenanigans. So this entire week, 60% of the time or more, we were able to divine using the garbage in the bank's own garbage cans, the data they leave behind, just regular minute bar data, to ascertain where it's likely to go next. Now, here's the beauty of it. I think the beauty of it is I have the times for tomorrow right now. I have the times for tomorrow right now. So all of the signals on the top of the histogram, right, are the selling pressure times, and all the signals on the bottom of the histogram are the buying pressure times. So when it went up here at 820, there's a good chance it's going to go up at 9:45, 10:40, or 1:25 tomorrow. When the market fell at 3 p.m. and 10:20 today and 6:35, there's a good chance that these times could produce the same amount of movement at those times. So what comes into play at that point? That's right, risk management. Risk management. Any questions about this? By the way, we don't just have tomorrow's times. We have Monday's times. We have Tuesdays and Wednesdays and Thursdays times for next week. They're all here. I have the times for the market for the next 7 days, which means every signal on this chart was available to us 7 days prior. We've been waiting 7 days for 1020, 7 days for 1050, 7 days for 1250. Do the signals already account for multi-time frame analysis? Akin, why do you make this harder than it has to be? The signals account for what happened on a 5-minute chart over a few thousand bars of historical analysis. I'm not looking at the 1, I'm not looking at the 5, or rather the 15 or the 60. If I want to look at what to expect on the 1-minute chart, I look at a 1-minute chart. Right? I can see what I was expecting to have happen on a 1-minute chart this morning. The times will always be different. Yeah. Now, can you put a, here, there about 5% of people are hardwired differently than me. And I have a hard time understanding it. It's nothing against, it's nothing against you. It's just I'm not wired that way. I have customers that put the 1-minute, the 3-minute, the 5-minute, the 15-minute, and the 60-minute signals on the same chart. These are the higher time frame weirdos. Now, most people do this because they're struggling to make anything make sense on the primary time frame. So we've been taught by other gurus, influencers, books, videos to jam as much stuff in there as we can. Put a MACD in there, put some divergence, put some higher time frames, support and resistance levels, look for the gaps. The gaps are going to get filled. Got to fill the gaps. It's just like, hey, if we're trading a 5-minute chart, why don't we just set the chart to 5 minutes? If we're trading a 1-minute chart, let's look at what the movements are consistently doing on a 1-minute chart, right? I don't know. You don't have to make it harder than it is, I don't think. So as you go up in the time frame, right, we can go from a 1 to a 5 to a 10. And you can see what the expected movements were on a 10-minute chart. There's no repainting, no disappearing, reappearing. I'm not going to tell you it's 80%. It's not. Anyone who does tell you 80, 90% is lying to you. And I can see the 10-minute signals into the future, right? And then as we start to progressively go higher, we can go to a 30-minute chart. Yeah. I was taught all the same things you were taught, and it worked so well for me, I started my own company. All the stuff I was taught panned out perfectly. Right? So Akeem, does that make sense? You study the time frame that you're trading. Yeah. Most people, probably 3-4 years in, they've spent between $25,000 and $50,000 on seminars, education, tools, Ouija boards, the whole 9 yards. So let's look at it. You know what? This might make a lot of sense. Let's look at the NASDAQ from the most basic study possible. Let's load 5 days of data on a 1-minute NASDAQ chart. So Akeem, here you go. Ready? These are the moves on a 1-minute NQ chart. And so what I'm going to ask the computer to do, we'll use the most basic analysis we can. I think a lot of people would understand this part. I'm going to say, hey, go back one trading day. So today is Thursday. So Joaquin, I'm going to go back to Wednesday. And I'm going to tell the computer, find the times yesterday that the NASDAQ moved up and down. Make sense? Phil, does that make sense? This is a 100 analysis. We're just looking at yesterday. So the signals here can only ever be 24 hours old, right? So when we hit OK, let me get rid of those advanced patterns. We'll just look at the signal dots. When I look at today, these were the times from yesterday that the NASDAQ went up or down. Does that make sense? And so it's telling us what times of day to look for the moves. Okay, it seems a little choppy. Whatever this nonsense was this morning, it was like, ugh. So now we can add more information to that. You know what? Go back and look at yesterday, the day before, and the day before that. And now we have a little more information. So Joaquin, on the NASDAQ, if I look at the last 3 trading days and I find the times consistent among them, you see how the chart got a little cleaner? The highs and lows started coming in the right spot. It's kind of neat, right? What we use is a 714. We go back last Thursday and 2 Thursdays ago, and we look at a weekday specific time frame. Yep, I need to give it more historical data. Let's come here. So this chart on the NASDAQ is a 714. This is the setting that we use in all of our webinars. It's the default value in the software when you purchase it. 714.00. Does that make sense? And this way we're looking at a specific weekday. What do these guys do on a Thursday? What do these guys do on a Wednesday? What do these guys do on a Tuesday? And so on. I think it's pretty cool. All right, it's not just limited to the NinjaTrader charts. We do have TradingView charts, for example. And so the only difference between the TradingView signals and, let me log out of there. There you go. And the NinjaTrader version is that TradingView only gives us access to 1 week's worth of historical data. TradingView gives us access to 1 week's worth of historical data. So we can see the next 5 trading signals out in front of us. Again, they never change, they never update, they never disappear, they never reappear. In the higher time frames, it's the same thing. We can see the next 5 signals in the future. But I can't do a 714 because we can't go back that far into the historical data. It's just a platform limitation. It's just a platform limitation. But TradingView is nice because we can take a look at a broad swath of instruments really quickly and take a look and see what's going on. For example, on the euro dollar, a lot of people are up there on the 1 hour time frame, and get a feel really quickly for which instruments are actively moving. Does the historical data limitation impact the signal accuracy? Surprisingly, no. Surprisingly, no. It's just a matter of preference. Like if you come here and look at Bitcoin on a 1 hour chart, you can see the times that we were expecting moves to occur: 10 o'clock, 8 o'clock, 11 o'clock, 9 o'clock, and 7 o'clock last night, with the exception of the 8 o'clock signal, all those guys worked out well. You come down to the 5-minute chart, same thing. That accuracy is still in that 60 to 70% time zone, right? So no, it doesn't affect it. I prefer NinjaTrader because I can do more with it. The platform gives me more options to do things, but if you're using TradingView, that's not really a compromise, I don't think, to use it, if that makes any sense. Yeah, let's come down to gold on a 5-minute chart. And all the people who bought gold at Costco, not happy today. Still happy because they bought it much less than this, but you can still see when these opportunities exist. So TradingView doesn't really impact the accuracy. So the price levels are, there are two kinds of lines on here. Let's go back to, I guess we can keep it for gold. Every signal has two lines. It has the stop line and it has the price line right here. The price line is right there. And you can see there's not much we can really change on this chart. The style and the visibility, we can change the colors of things. But you're going to get that horizontal line right here, ASM. And what that allows you to do is now bring a horizontal support and resistance element into the trade. So on the close of every one of those signals, you're going to have a ray that's extending forward to the right. And so what I'll tend to do is just go back with a ray tool and put that information in. So I have the horizontals now that are generated by the time signals, and I'll extend them forward in the future. Is that what you were referring to just now? I'm not sure if that's what we were referencing. While you're answering that, let's take a look at the higher time frames, because there's something really interesting happening that I want to bring your attention to. These are the daily signals that we've been following for the E-mini S&P, and they've been working really well for the most part as we come up to approach the all-time highs up over here, right? Now, there's something happening on the daily time frame that I want to show our advanced users, and we'll come back down to the shallow end of the pool here in a second. But there was a signal on May 8th that I was expecting to come down. Is Earl in here right now? Hey, Earl. And Drew, are you in here too? Dave? Okay, good. I got my big swingers up here. Hey, Chris. You guys were at the Omnia event, and what we ended up having was a rapid acceleration sell dot right here. And Earl, this is one that I referred to as a corrupted signal, because one of the 4 bars was this little tiny signal in the middle. And what we start to notice is that there's a point in the cycle where all the signals start going backwards. Let me pull up a chart here real quick. I just want to go over this with you. There's a point in the cycle. This is from my trading class that I teach every week. Do you see here, guys, that when we get to a sell signal and Omar, it just goes up and up and up and keeps going up. That signal is behaving like it's reversed. The red signal is going up instead of down. Well, what that usually sparks or begins is a head and shoulders pattern. And then in the middle of that pattern, the head puts in a peak. And then all the signals from this one forward tend to go backwards until it either breaks out this direction or breaks out that direction. It's a little advanced. I don't want to go too far down the rabbit hole, but I wanted you to see that on the ES, it's starting to do it. And so the blue signal went up, which usually telegraphs that this is going to go down, and then this signal is going to go up, and then this signal is going to go down. And it usually occurs near a trend reversal. So we may be seeing a petering out of the market here as we come up into this next cluster of signals on the E-mini S&P. Just watch for tomorrow into Tuesday of next week to be lower lows on the daily chart. If we look at Bitcoin, I'm going to go ahead and activate my Coinbase data feed on the daily chart. And that's going to repopulate the signals. I told you guys last week about May 16th. And you can see for yourself that we are now in the next bull trend. The signal before that was May 1st until May 13th. The signal before that was April 10th that I told you about until April 22nd. And this signal is going to last until May 29th. So Bitcoin, we're told, is this hot mess, this random nightmarish instrument. But it seems to me that people are moving their hard-earned asset dollars over to it. And if it's putting in higher highs and getting signals from the governments that this is the direction we're headed, I find that fascinating, because the gold chart did not put in a higher high. We're still under the highs put in back in early April, or late April, forgive me. So gold, I told you last week to look for the up move right here on May 15th, lasting until May 30th. And I still think the trend in gold is higher, because, Earl, you'll see none of the signals have gone backwards yet. All these signals are preserved, and we have not, as of yet, in gold, seen one of these rapid acceleration sell dots, a blue dot that just goes higher and higher. This is the Paul Revere of trend reversals, and then the subsequent signals will reverse and go in the other direction. And right now on gold, I don't see it. We see it on the ES. We don't see it on gold. We definitely don't see it on Bitcoin. The last sell signal on the 13th did finish lower by the 16th. And so now as we move into Bitcoin, the next possible place that we can see a rapid acceleration sell dot is if we get to the 29th and we see 1, 2, 3 higher closes like that. And even then, if we do, Bitcoin will continue higher until the 11th of June, where it may be an inverted sell signal. But as of right now, the uptrend for Bitcoin on a daily time frame is preserved because we've seen no evidence of inversions yet. Does that make sense, Earl? Drew, Dave, does that make sense? It's pure accumulation. Okay, take a look at silver. Silver, I'm not sure what the deal is. It's just back and forth and back. I think everyone who has silver is like, what are we supposed to do with it now? What? I got boxes and boxes of this stuff. I don't know. Do I sell it to the guy on Pawn Stars? It doesn't forecast the price levels in the future. It does not forecast price levels. It does not forecast price levels. So silver is just bleh. The one thing I notice about silver is that if you look back here on the signal on December 27th, it's spending more time above the closing price of that day than it is below. And as of now, it's doing the same thing. It's spending more time above the closing price of the 14th than that initial dip below, which means it's probably going up on June 2nd. Means it's probably, if you look at this range here, Earl, from the bottom to the high of that range, if I copy it, from the bottom to the high of that range, this is what I expect between now and June 2nd on silver. Let's take a look at Tesla, sure. And Mr. Musk is going to lead us all to salvation. Sure he will. But if we look at the signal, let me see where we're at or what we're doing. Just a quick cursory examination. The buy signal lasts from May 16th until June 12th. We did have the backward signals down at the bottom. So Drew, take a look. Dave, can you see here how it fell on March 24th? And then it reversed up on April 7th. And there was a descending trend line right here. And then if we mark the low, all the signals in the triangle were reverse polarity. And now we're in nominal polarity. Everything is normal again. So the way that pattern works for reversals, when the trend reverses like that, is you mark how big the wedge was. And so at the top of that, I'm going to put one more line and say that Tesla still has room to go by the 12th until 379, it looks like. 379. Any other instruments we want to take a look at while we're out here? We looked at Bitcoin, silver, E-mini S&P, gold, oil, sure. Let's take a look at oil. Okay, so here's another classic example. This is what Tesla did before it erupted. When we get to the bottom of a trend, you'll notice that the buy signals go down, the sell signals go up, the buy signals go down, the sell signals go up, and we have an emerging trend line. So right here is the same thing we saw in Tesla. Right here is the lowest low, which means the range of that wedge is right here. And now watch with me carefully, because once you see it, you can't unsee it. Earl, notice it goes up on the 7th until the 28th. Then it goes down on the 28th. Then it goes up on the 7th. And now it's going down on the 14th. So this usually occurs at the bottom of a trend. At the bottom of a trend. And now we're watching for either a close above this line or a close below this line for polarity to revert to normal. Blue is down and white is up. So we can split this gap between, I'm going to lose a few people here, but I can split this gap here. And the next push up in oil is on May 26th, 27th. That's when I'm expecting the next push up. And if oil closes above this line, I'm expecting it to go at the moment to 73.43. If oil closes below that line, I'm expecting it to go to 43.59. Geez Louise. So that's oil for you. I don't look for fair value gaps. I don't know what they are. And if 100 people in a room can't tell me what it is and they all agree on it, I don't want to know about it. Euro dollar, sure. Last one on the daily. There's the euro dollar on the daily time frame. You tell me what you think is going to happen. The signal is for Thursday, May 22nd. And we already had that reversal sequence down here. And the bottom of the sequence was there. So I'm expecting it to go up from May 22nd until June 3rd, until we see one of those rapid acceleration sell dots up here. The trend in the euro dollar is preserved and continuing higher. NVIDIA, sure. We just look at the times and the chart tells us what the deal is. Oh, NVIDIA. NVIDIA, have you met Lydia? Lydia, the tattooed lady. Down on the 25th, up on the 13th, down on the 18th, down on the 4th. Now something weird is happening. Let me talk it out. Let me talk it out real quick, and let's see what we've got. Earl, it went down on the 28th, right? And so if I do splits in between here, it definitely was normal at the 33. It went down from April 9th until April 22nd. Then we had this little move down here. So I don't see any evidence of a trend reversal up here. If anything, I see long from here to the 30th. Then there's like 1 day, and then long from June 2nd until June 10th, July 10th. So that reversal sequence, it took place down here already. This seems to be something that has taken place in a lot of these markets already. that thrust back up out of the low. This was all the tariff crap. Yeah, so I think, let me just look real quick at the wedge height from here to here, up above. It feels like NVIDIA has room to get back to 157, 158. Yeah, so that's what we got. That's what we got. And again, you can do the same thing in TradingView. We can add that information in there, and we can see if we want to trade NVIDIA on a 5-minute chart, or we want to go to an hourly chart. It's searching through all of that data for us. It's searching through all of that data for us and telling us in the future when the time window is about to open up again. When that time window is about to open up again. And so it's really cool to be able to come over here and say, well, what is NVIDIA about to do? There is a tremendous, there are two things in the world, 3 things in the world we don't have enough of right now. What do you guys think those things are? Let's compare notes. There are 3 things in the world that we don't have enough now. There's a housing shortage in the United States, somewhere between 2 and 3 million homes. They're squeezing people as hard as they can into rentals, apartments. The second thing we need is energy. We need more energy than we can make right now. I heard from my oldest son today that because people are saying thank you and please when they're writing in ChatGPT, it's consuming massive amounts of extra electricity to process. They're telling the users not to be polite to the AI. The second thing is electricity. The third thing is chips. There are 2 things that are coming whether you like it or not, that somebody already does better than us. There is a car company from China who is dominating Europe, South America, Africa, and they are on the doorstep in America. They are bankrolled by Berkshire Hathaway, and BYD has self-driving cars that cost $20,000, $30,000 with a 100% tariff that come with free self-driving. Those cars need chips. The second thing that is in line with that are humanoid robots. Humanoid robots are having their iPhone moment right now. They're having their iPhone moment right now, and you can say, not me. They're coming. And the one company, Unitree, right now, that's a $10,000 robot. And they're teaching it to empty the dishwasher. They're teaching it to pick up trash. They're teaching it to vacuum the house. There's another company that's powered by OpenAI, humanoid robot. This guy right here. And if you haven't been paying close attention, these robots are in use right now in a BMW factory in South Carolina. They are in use in a Spanx factory moving boxes around. This is a metal press, and they work 24/7. And the more they work, the better they get. And they all need chips. They all need chips. And there's a handful of companies that are making them. There's a handful of companies that are making them. So cars will be driving themselves. Trucks are driving themselves. That robot revolution is here. They're here. You can buy them now and they do things. So yeah, anything related to electricity, anything related to energy, they're building nuclear power plants again. They're building small nuclear power plants again for the first time. All of those things, just keep watching. I don't think Tesla's the company to usher us in. He's lied about every single thing. There's $250 million worth of orders for roadsters taken years ago that were never delivered. So I hate to say it, but there's an ocean of Chinese technology, and we are probably 1 to 2 years behind. And this is a real thing. These are real robots in use in real factories that require NVIDIA chips. And so you may say it's slow, but once they bought it, they never have to pay a vacation day or a sick day. They never have to pay overtime. And there's actually a term right now. If you want to know, a dark factory right now in China is a warehouse-sized building filled with robots and none of the lights are on because there's no worker inside. I think they're 2 to 3 years ahead of us, and in a very short period of time, the US is scrambling now to build its infrastructure to get back to the point where these guys already are. And those people are going to need chips. Yeah. So I'm sorry for waxing lyrical on that. It wasn't my intention to go down that path. So yeah, just kind of bring it back home. What we sort of determined here today is that it's possible to know in advance when to look for moves. We know that about 60 to 70% of the time, we're going to see the reaction we're expecting. We can encapsulate those with stops and targets and all the things I've taught about in the other webinars, but whether it's that or Ethereum or XRP, any of the things, we can see in advance when those moves are likely to occur. So if a friend of yours says, hey man, Ethereum's about to explode, look at your chart. If you see that, give it a shot. If you see that, give it a shot. And now right here again, rapid acceleration sell dot. I'll just mention this really quick. Earl, higher close, corrupted candle, higher close. I think Ethereum now, based on the patterns we've been learning, goes up until June 13th, where it will be a higher high and start to reverse and go back down. Always look at the chart because the banks are telling you what they're about to do, and it's just up to us to believe them. Any questions before we finish out the session here today? Any singular questions on the brain itching you right now? Yeah. All right. Here's what you need to do to get started. You're going to go to the website. We've never made it easier to get started with us. And if you click on the Trading Tools tab of our website at backtothefuture.com, backtothefuturetrading.com, click Learn More, TachEon Warp for NinjaTrader. At the bottom of the page, you'll see that there's a way to get started with us. It is $4.95 for a 30-day license of the program. Every 30 days, it'll automatically renew. You can cancel anytime, and you won't be billed in the next billing cycle. There is an annual license available for $29.95, and then you can have it and own it forever. No more anything ever again, $59.95. So this is a great way for us to kind of get started, and you can see from the signals that we're working with here that all it takes really is one trade, not to make it sound easier than it is, but one trade from here to here. That was a $129 move at the end of the YM session today. That's $500. That's a $650 move at the end of the day on the YM. And then if you bought it here and kept it, that's another $200. So there's $850 just sitting there, the last two signals of the Dow. If you're using TradingView, we have that version for TradingView. It's called Kronos. Kronos, the Greek god of time. If you click on the Learn More button at the bottom of that page, you'll see we have a low entry ramp here. It's just $2.95 to get started, or you can get an annual license for $19.95. Or you can own it forever and ever. It's mine, it's mine, it's mine. I will love him and hug him and call him George. It's mine, $29.95. And you can have it and get started. If you want to learn a little bit about the experiences people had before you got here, we've snuck up to a 4.6. We had a 1-star review from a guy who never bought the program, who got mad when I told him there's no free trials. He's gone back and added even more. You can read all about how I am a red flag. And remember, no free trails. There are no free trails here. Otherwise, people who actually own the software, you can read about their experiences here. If you're a customer and you want to let people know what your experiences are, good, bad, or indifferent, I would encourage you to visit trustpilot.com. You can search for us at Back to the Future Trading. Let people know what's going on and what kind of experience you're having. We also have a Discord available for all of our users. If you want to be part of a community here. And these guys are talking to each other every day. And customers supporting other customers are in here. And you can be a member of that community as well. Those are the people leaving the reviews that can actually help you if you have questions. Once you purchase the software, there's video training, there is mentoring available, all sorts of good stuff. Any questions about that? Very easy to get started. We are engineers who got sick and tired of listening to guru garbage. I got tired of losing money. I got tired of watching trades that we were in go in the opposite direction 90% of the time. I was tired of the parade of experts that were telling us there was a way if we only sit at their feet and watch them for months and days and years. We built not a better mousetrap. I think it's an almost perfect mousetrap. It takes into account that these guys cheat. It takes into account that they can't fake time. They can fake price action. They can fake volume. They can run stops. Yes, they can even fake fair value gaps. The one thing that they can't sweep under the rug is the time that they do these things. And if we turn 33,000 lines of code and database management loose with the sole purpose of finding the times they're about to do it again, maybe 60% or more of the time, I think you could do a lot worse. And based on the testimonials, I know you can do better if you trust us. May the wind be at your back. May the sun shine on your face. May the valleys rise up to meet you and the mountains lay low before you. I do not consider myself a guru for two reasons. That's a good question. Number one, everything I know is in the space of the website. I haven't held back one secret. If you log into the website and you go to the video training archive, everything I know is there. I publish all of my setups. I published the advanced training that I did with this backwards setup here. All of this is in the public domain. This page right here represents 15 years of my life and the most significant breakthrough I had. And the first thing I did was share it with everybody. So gurus don't share. A guru will tell you that they have to keep it, that it's proprietary, blah, 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 blah. So no, I am not your guru. The reason I'm not a guru is because there are customers training other customers using the system in here. There are customers training other customers. When it is generational, the first generation is insignificant. So that removes me from, absolves me from guru status. I think. I hope. Anyway, I hope that made sense. I love you guys. I'm gonna tear out of here. I had a doctor's appointment this afternoon. They slapped a wireless heart monitor on me with some sticky glue. And I'm not too excited about it, but I got an all clear on my EEG. I got an all clear out of my blood pressure. They think it's just anxiety and stress. And I think most of us are feeling that at this point. So I got mostly all clear, but they want to record my heartbeat for a week and just check it one last time. And yeah, let's just all calm down a second. There's a lot of crazy in the world right now, and this is the time that they do it. This is the part of the multi-year cycle where banks and institutions and governments and militaries get away with a lot of stuff. I'm going to be giving a webinar about that here shortly, I think, just to bring you up to speed. But I really do wish peace for everybody here. Find a way throughout the day to settle down, do things you enjoy, push everything out of the bubble that annoys you, turn the news off, close your phone, spend time with family, friends, people that you love, a pet. I love my dog more than most people I've met. Make time for them, do the things, throw the ball, walk in the grass with no shoes. We don't get a lot of time on this planet before they punch our card. Make the most of the time that we do have. I love you guys. I'll see you later. Thanks for supporting us. If you're a customer, you mean the world to us. If you're a new customer coming on board, come on in. The water's fine. I'll see you later. Bye-bye.